Hello friends, we have heard about many times about Boston Consultancy Group. That is Boston Consulting Group as well. We are alternatively use it as Boston Consulting or Consultancy Group. This is a matrix given by BCG, that Boston Consulting Group, and in this we have analyzed the business by market share and market growth in dividing in the four types. In these all types we have divided, this is very high growth and which is very low growth. We will discuss in details, and after this video you will come to know each and every point about this Boston Consulting Group's fundamental analysis. Now, what does this chart tells about? This matrix or chart is given for the classification of products into cash cows, dogs, rising stars and question marks. As you can see here, is known as this Boston classification of product market strategy. Now, firstly we are going to discuss about these stars. Let me firstly analyze. This is very high to low, this is high to low, and this is high to low. Here we are making this chart. This side high, this side low, and from here this side high, and according to market share and this market growth. Now this star has high market growth and high market share as well. This is firstly we are going to discuss about star. Stars are those products with a high share of high market growth, and in the short term this require capital expenditure in excess of the cash they generate in order to maintain the market position but promise high returns in the future. This has very promising futures, and this has growth prospects as well in the market. So this gives green thumb rule to invest in this type of companies. Next, cash cows. Cash cows are the second point we are going to discuss about. Cash cows are the matrices which has a very low growth rate. Here we can see growth rate is low but the market share is high. Market share is high. Here you can see cash cows have market share is high market share but the market growth is low. Why does this happens? This happens because cash cows need very little capital expenditure and generate high level of cash income. The important strategic feature of cash cows is that they are already generating high cash returns which can be used to finance the stars. Stars which are being one at one time after saturated points, stars also starts falling down and it becomes cash cows, right? And cash cows are persistently generating their incomes, and this could be used as financing the stars again. This is alternatively a same type of finance, earning from cash cows and financing in stars and growing investments. This could be good strategic example given by the BCG. Now third point we are going to discuss about is question marks. This has low market growth but high low market share. Question marks have low market shares but high market growth. These are the products in a high market growth but where they have a low market share. Market share is low. A decision need to be taken about whether the product justify considerable capital expenditure in the hope of increasing their market share. Whether we should increase their market share or not. This we have to analyze, or whether they should be allowed to die quietly as they are squeezed out of the expanding market by rival products. These products might be squeezed by the competitors. So considerable expenditure would be needed to turn a question mark into a star by building up market share. Question marks will usually be poor cash generators and show a negative cash flow. If we are going to invest in these question marks, then there is high probability that the growth might be low, but the market share is very high of this type of stocks. And if we invest more and more in this type of companies, then our capital might stack, so that we have to considerably analyze and we have to invest. Now dogs, this is the fourth matrices given in the BCG concept. These are the products with a low share of low growth market. This market growth is also very low, and uh, they have fallen on hard times as well. They have fallen on hard times on the, for example, we can say this COVID times, which the share market has fallen. This type of companies has very much squeezed, you can say, in this type of bad times for the companies, surviving companies. Mm, Dogs should be allowed to die or should be killed off, although they will show only a modest net cash outflow. This type of companies will not at any time show cash inflow or profit in their companies. They are cash traps, or you can say alternatively as cash traps, which tie up funds and provide a poor return on investment and not enough to achieve the organization's target rate of return. So this is the overall BCG matrices. We have I hope we have fully discussed and about this concept, and you have come to know about this concept very well. Thank you.